There's a tax you pay every single day. You never voted for it, no politician campaigns on it, no law explicitly authorizes it, and yet it extracts more wealth from ordinary people than income tax, sales tax, and property tax combined. It's been operating for over 2,000 years, from the Roman Empire to modern America, from the Ming Dynasty to the European Union. It doesn't care about your politics, your nationality, or your income level. Rich and poor alike pay it, though the poor pay far more as a percentage of what they own. And the cruelest part? Most people don't even know it exists. This invisible theft has a name, inflation, but calling it inflation makes it sound like a natural phenomenon, like weather or gravity. It's not. It's a policy. It's a choice. And it's the oldest, most effective tool governments have ever used to transfer wealth from citizens to the state without ever asking permission. This is the wealth records, where money, power, and history collide. And nothing is ever as simple as it looks. To understand how this hidden tax works, you need to go back to where it was perfected, ancient Rome. In the 1st and 2nd centuries after Christ, Rome was the most powerful empire on earth. Its currency, the silver denarius, was trusted across 3 continents. Merchants from Britannia to Egypt accepted it without question. For decades, the denarius contained roughly 95% pure silver. That consistency created trust, and trust created economic stability. But empires are expensive. Armies, roads, aqueducts, bureaucracies, and endless wars against Germanic tribes, Parthians, and internal rivals drained the treasury faster than taxes could refill it. Roman emperors faced a choice: raise taxes openly, which risked rebellion, or find another way to fund the state. They chose the hidden method. They began debasing the currency. Emperor Nero started the process in 64 CE, reducing the silver content of the denarius from 95% to about 90%. Most citizens didn't notice. The coins looked the same. They spent the same. But the empire had just stolen 5% of every Roman savings without announcing a single new tax. And once that door opened, every emperor who followed walked through it. By the time of Emperor Septimius Severus in the early 200s, the denarius contained only 50% silver. By the reign of Gallienus in the 260s, it was down to 5%. By the end of the 3rd century, the coin that had once anchored the Roman economy was essentially worthless bronze with a thin silver wash. The government kept pretending it had the same value. Merchants knew better. Prices exploded. A measure of wheat that cost half a denarius in the year 200 cost thousands of denarii by the year 300. Soldiers refused to accept their pay in debased coins. The army demanded payment in gold or goods instead. Trade broke down. People hoarded real silver and spent the junk. The economy collapsed into a death spiral of inflation, distrust, and chaos. And here's the key point. The Roman government caused this. Not barbarians, not plagues, not bad harvests. The state deliberately destroyed its own currency to fund spending it couldn't afford. And in doing so, it wiped out the savings of millions of ordinary Romans who had trusted the system. That is the hidden tax. The government prints or debases money, spends it at yesterday's value, and by the time it circulates through the economy, every coin you hold is worth less. You didn't get poor because you made bad choices. You got poor because the state stole your purchasing power. But Rome wasn't the last to discover this trick. Every empire, every kingdom, every modern nation has used the same playbook. In medieval Europe, kings faced the same problem. Wars were expensive. Castles were expensive. Courts were expensive. But raising taxes was dangerous. Peasants revolted. Nobles resisted. So kings found a workaround. They recalled the coinage, melted it down, mixed in cheaper metals, and reissued more coins with the same face value. Technically, the king doubled his money supply. In reality, he cut everyone else's wealth in half. The French monarchy did this repeatedly. So did the English crown, the Holy Roman emperors, the Spanish kings. It was so common that people began weighing coins before accepting them, just like the Vikings, because they knew the official stamp meant nothing if the metal content had been diluted. Governments lied, the scales didn't. And those who understood the game protected themselves. Those who trusted the system got robbed. Fast forward to revolutionary France in the 1790s. The new government, desperate for money after abolishing the monarchy and seizing church lands, issued a paper currency called the assignat. It was backed in theory by the value of confiscated property. At first, it seemed brilliant. The government could fund the revolution without gold or silver. But then they printed more, and more, and more. Within a few years, assignats became worthless. A cartload of paper money couldn't buy a loaf of bread. Farmers refused to sell food for worthless notes. Riots erupted. The revolution devoured itself, not because of ideology, but because the government destroyed its own money. And once again, the people who suffered most were the ones who had trusted the currency. The wealthy had already converted their wealth into land, foreign gold, or goods. The poor watched their savings evaporate into nothing. Same story, different century. Now let's jump to the 20th century. After World War I, Germany faced crushing war reparations demanded by the Treaty of Versailles. The Weimar Republic couldn't pay in gold because it didn't have enough, so it did what every desperate government does. It printed money. The German Reichsmark, once stable, became a joke. In 1914, $1 US bought 4 marks. By 1923, $1 bought 4.2 trillion marks. People carried money in wheelbarrows to buy groceries. A loaf of bread cost billions. Workers demanded to be paid twice a day so they could spend their wages before they lost value. Life savings built over generations became worthless in months. The middle class was obliterated. And out of that economic and social chaos, extremism rose. The Weimar hyperinflation didn't just destroy wealth. It destroyed trust in democracy, in institutions, and in the future itself. And once again, it wasn't an accident. It was a policy choice. The government chose to print rather than face the political cost of austerity. And the citizens paid the price. But you don't need to go back a century to see this. It's happening right now. In Venezuela, the government printed money to fund social programs, subsidies, and corruption. The bolivar collapsed. Inflation hit over 1,000% at its peak. A cup of coffee that cost 500 bolivars in 2016 cost 2.5 million bolivars by 2019. Doctors, engineers, and teachers fled the country because their salaries couldn't buy food. The people who stayed bartered or used US dollars. The national currency became trash. In Zimbabwe, the same pattern. Robert Mugabe's government printed money to pay for land reforms and government salaries. By 2008, inflation reached 89.76 trillion % per month. The Zimbabwean dollar was abandoned entirely. People used South African rand, US dollars, anything but their own money. In Lebanon, in Turkey, in Argentina, the story repeats. Governments spend beyond their means, print money to cover the gap, and inflation devours the savings of everyone who trusted the system. And then there's the United States, the most powerful economy in the world, the issuer of the global reserve currency. Surely America wouldn't play the same game, right? Wrong. Since the creation of the Federal Reserve in 1913, the US dollar has lost over 96% of its purchasing power. A dollar in 1913 could buy what $30 buys today. That's not because goods got more expensive, it's because the currency got weaker. And how did that happen? The same way it always happens. The government spent more than it collected. The Federal Reserve created new money to buy government debt, and the money supply expanded faster than the real economy. Every time the Fed prints trillions, every time the government runs a massive deficit, every time new money floods the system, your savings lose value. You don't feel it immediately. That's the genius of the trick. Inflation is slow, quiet, and invisible. But over years and decades, it's devastating. Here's the part most people miss. Inflation is not a bug in the system. It's a feature. Governments love inflation because it reduces the real value of their debts. If the US government owes $38 trillion today, and inflation runs at 3% per year for a decade, that debt becomes cheaper to repay in real terms. The government borrowed in 2024 dollars and repays in 2034 dollars that are worth 26% less. It's a slow motion default. And who pays for it? You. Because while the government's debt gets lighter, your wages, your savings, and your purchasing power get crushed. That's the hidden tax. The government doesn't take your money directly. It just makes your money worth less. And because most people don't understand inflation, they blame everyone except the real culprit. They blame businesses for raising prices. They blame greedy corporations. They blame foreign countries or oil cartels or supply chain issues. All of those can contribute. But the root cause is always the same. Too much money chasing too few goods. And who controls the money supply? The government and its central bank. This is why inflation is the most regressive tax in existence. It hits the poor hardest. If you're wealthy, you own assets. Stocks, real estate, commodities, businesses. When inflation rises, asset prices rise too. Your wealth is protected, even enhanced. But if you're working class, if your wealth is in cash savings or a fixed salary, inflation destroys you. Your rent goes up. Your groceries cost more, your gas, your utilities, your healthcare, all of it gets more expensive. But your paycheck stays the same, or rises slower than inflation. You fall behind every single year. And the government never admits it's taxing you. They just print money, spend it, and let you suffer the consequences. That's the brilliance of the scam. There's no tax bill. No line item that says, inflation tax, $5,000. You just quietly get poor, and most people never figure out why. So, what do? How do you protect yourself from a tax that's invisible, unavoidable, and designed to look like anything except what it is? History gives us the answers. Every time currency collapses, the survivors are the ones who held real assets. In Rome, it was land and gold. In medieval Europe, it was silver and property. In Weimar Germany, it was foreign currency and tangible goods. In Venezuela, it was US dollars and Bitcoin. The pattern is always the same. When paper money fails, value flows to things that cannot be printed. Gold, silver, real estate, productive businesses, commodities, anything scarce and useful. The people who understand this move their wealth out of currency and into assets before the collapse accelerates. The people who don't lose everything. But there's a deeper lesson. The hidden tax only works because most people don't see it. Governments rely on financial illiteracy. They rely on citizens not understanding the difference between nominal and real value. They rely on people trusting institutions that have betrayed them for 2,000 years. And that ignorance is expensive. Because every time you hold cash instead of assets, every time you keep savings in a bank account earning 0.5% interest while inflation runs at 4%, you're volunteering to be taxed. You're giving the government permission to steal your wealth, not through force, through apathy. And the longer you wait to understand this, the poorer you become. That's not a theory. That's observable, measurable, historical fact. Inflation has been stealing wealth for over 2 millennia, and it's not going to stop. The Romans didn't fix it, the French didn't fix it, the Germans didn't fix it, and modern governments won't fix it either. Because inflation serves the state. It funds wars, bailouts, subsidies, and bloated bureaucracies without requiring politicians to raise taxes openly. It transfers wealth from savers to debtors, from workers to asset owners, from the future to the present. And as long as most people don't understand what's happening, the scam continues. But you don't have to be a victim. You can choose to see the game. You can choose to protect your wealth. You can choose to stop trusting systems that have been lying for 2,000 years. History doesn't repeat, but if you don't understand it, it will crush you all the same. The hidden tax is real. The only question is whether you'll keep paying it. If this gave you a new perspective, hit subscribe. History has the answers. I'll show you where to look.